Hey y'all, have you ever wondered how to calculate PMI on an FHA loan? It's kind of like the Apple iCloud. Nobody really knows where it comes from. Stay tuned, I'm about to explain it in super simple terms. Okay everybody, welcome back. So I'm going to give just an example of PMI on an FHA loan. And FHA, remember, stands for Federal Housing Administration. It's called actually MIP, Mortgage Insurance Premium, okay? On a conventional loan, it's called PMI, but flip it around and it's MIP on an FHA loan. So FHA has two types of mortgage insurance. They have part of it on the front end. They want their upfront premium, and that is because these loans foreclose more often, and so they want some of their money up front just in case. So this percentage for everybody, no matter your credit score or anything, any FHA loan has an upfront premium of 1.75%. Okay? And remember, MIP is on an FHA loan no matter how much you put down. So we have another video about PMI with more than 20% down that we can explain. But for right now, we're going to do a $200,000 loan, and we're going to times it by 1.75%, and that is $3,500, $3,500. So your new loan amount adjusted is $203,500. And that's, whatever your interest rate is, that's what you're going to be paying interest on that $203,500, okay? Now, the second part of mortgage insurance for a FHA loan is monthly. And that's because they don't want to charge all of it to you up front. They want to just spread it out, okay? So monthly, if you're putting 3.5% down, which is the minimum on FHA, or 5% down, you pay 0.85% mortgage insurance. So you would take your $200,000 loan amount, you take the loan amount prior to that upfront premium. So in our $200,000 example, we're going to use $200,000. We're going to times it by 0.85%. I'm looking at my cheat sheet. I get $1,700, $1,700. And then you divide that by 12. So divided by 12, it's $141.67. So that is your monthly. That's added to your principal and interest payment. So that is how you calculate mortgage insurance. Now, a side note, if you put 10% down or more on a FHA loan, the PMI reduces to 0.80%, and it's only payable for 11 years. Only 11 years, guys. So you have to pay PMI insurance for 11 years, regardless of your loan to value, even if you put 50% down. And I have another video on why would I even do, if I'm putting down more than 20%, why would I do an FHA loan? So we're going to cover that in another video. But for right now, just know 10% down or more, PMI is waivable at some point 11 years later, or you can refinance and of course do it then. And it's a little bit lower premium. Hope you've gotten some good information. Talk to you soon. Legacy Mutual Mortgage is an equal housing opportunity lender. The opinions expressed here do not reflect those of Legacy Mutual Mortgage.